Are you a home buyer worried about the pre-approval process? Let's take a look at that complete process right now. My name's Travis Anderson. I'm a realtor. I work with both buyers and sellers here in Minnesota and Western Wisconsin. Let's get right into it. Now, step number one in any mortgage pre-approval, in my opinion, would be to call a mortgage broker and have an initial phone consult. Now, a lot of mortgage brokers will have you go right to the application, but in my opinion, you're going to want to have a conversation with someone. Make sure that they're competent, make sure that they can answer any questions that you might have up front, and really get a good understanding about how this process is going to work. So the first thing you should do if you're in the pre-approval process, don't fill out a form online. Don't do anything like that. Give a mortgage broker a call, someone who specializes in mortgage financing, and have a conversation before you begin. Step number two is going to be the application. The application is really just a discovery process. We're going to get the information about your income, your debts, your credit score, things like that. And that's going to give the lender a really good idea of where they can start, and they're going to start analyzing your financial situation. So after you've had that initial phone call, the next thing to do would be that application. Once your application is completed, the lender is going to pull your credit. Usually it's from one of the three credit bureaus. Sometimes it's from all three of them. It kind of depends on the lender. That's something you might want to get answered up front. Also, the credit might be what's called a soft pull. In other words, it doesn't really affect your credit score. Sometimes it's going to be more of a hard pull. If you're talking with a mortgage broker, it's possible that multiple lenders are pulling your credit at the same time. These are all questions that you're going to want to get answered, because the more often you get your credit pulled, in fact, if you have too many inquiries in a short amount of time, it actually reflects poorly on your credit worthiness. So this is something you're going to want to have a really good understanding about. Is it a soft pull? How many credit bureaus are you pulling from? Is it a hard pull? How many lenders are pulling it? That type of thing. But after application, your credit score is absolutely going to be pulled. Now, the third step is going to be another phone call or maybe even a meeting with your mortgage broker to give you your mortgage options. Now that a lender knows how much money you have, what type of debts you have, and what your credit is, now we're going to talk about your mortgage options. Right? We're going to look at, do we need a down payment? Can we do 3% down conventional? Is it FHA because of our credit worthiness? Do we need to do VA financing because we're a veteran? What about USDA financing because we're out in the rural areas? So all of these things, you're going to want to look at your options. And I encourage every lender to give my buyers multiple options so they know what is best for them. And when you're reviewing that, you're not locked into anything. You don't even have a home in mind yet. So now it's just getting a really good understanding about what that is. Now, there's two things that you need to know from any lender when you're looking at the options. Number one, what is my interest rate? And number two, what are the loan costs to get that interest rate? Those are the two things. A lender can provide you with what's called a loan estimate once we have the mortgage option in mind. And that's what you need in order to shop different mortgage companies. If you're getting a bad feeling, or if you think the rate's too high, if you think the costs are too high, consult with your realtor, consult with another mortgage broker and see what's what. But once we have those mortgage options, the next step in the process is verifying everything that we've already told the mortgage broker. So we told them how much our income is. Now provide me with evidence of that. We told them that we maybe have child support or alimony or some other debts or some other income that's coming in. Okay, well, now it's time for you to verify all of that. At a minimum, you're going to need your bank statements over the last couple of months. You're going to need your W-2s or your tax returns over the last year or maybe even 2 years. And you're going to need any other income or asset verification regarding your down payment. If you've got 3% or 5% or 10% down, whatever the down payment is, you're going to need to prove to the lender that you've got that money somewhere, and it might be in a retirement account, in a savings account, or what have you. Of course, from that point, you can also look at down payment assistance options, which you would have already reviewed with the mortgage broker. And then the last step in the process, of course, is what's called a pre-approval letter. Now, up until this point, you could have a letter, but it isn't a pre-approval letter. It's really a pre-qualification. You don't want to get caught with your pants down writing an offer with only a pre-qualification, because a good realtor like me, we're going to be able to determine that when we talk to the lender. You're going to need your income and your assets verified before you're writing an offer on a home. That's going to put you in a better, stronger, almost a cash position. Of course, there's still some financing things that will come up, but it puts you in a much stronger negotiation position than if you're pre-qualified, or of course, if you don't have a pre-qualification at all. So those are the steps to the pre-approval. Again, my name's Travis Anderson. If you've got questions, do me a favor, shoot me a text, give me a call, hit me up in the comments section. And as always, all my best to you and yours.